Welcome to Furnley House's coronavirus update video. Today we wanted to share a video with you to talk to you about what we're doing in the face of the current virus we're battling, both as a business but also more importantly from our investment perspective and how we manage our clients' investments. In order to help us with that, I've asked Kel to join us today. Kel works with Asset Intelligence as an investment consultant, and as you know, Asset Intelligence provide us with our discretionary management services and have also provided us for research services for clients that invest in other methods with us. And more recently, as we entered our new building, Asset Intelligence have joined us upstairs in the new building, and so the benefit of that is that we're able to work together to look at things like today's, the impact this is having on our investments. So the first thing I wanted to talk to you about is yesterday we met as a business with all of our staff, having completed a risk assessment of what coronavirus could mean for our business. The most important thing for us is at times like now we need to be open and accessible for clients that have got fears or concerns. We understand the money you have invested with us is very important, be that whether it's for your retirement, whether it's saving for the future or other purposes. You need to make sure that we're available. And we are committed to staying open throughout the remainder of this period. In order to do that, there are some precautions we've taken as a business, such as dealing with staff returning from abroad, dealing with how we would act if one of our staff was to contract the virus, and making sure that our staff have got the ability to work from home. We've got secure communications in place, we've got processes in place on how we will deal with that. But equally, what that means is we've talked to our advisors about prioritising where possible video meetings, telephone meetings instead of meeting face to face, and we hope you understand that's done to address the risks that we see for us to be able to keep the business open, but more importantly a number of our clients are in the higher risk categories for this virus. So if you have meetings planned, we hope you understand if there are adaptations or changes made, and equally if for some reasons for a number of reasons there may still need to be a face-to-face meeting, there may be some additional questions we'll ask you in advance just to make sure that we're not taking undue risks for either party. Now, when I spoke yesterday to our staff about the changes we're making, we talked about the fact we're in a really unprecedented position at the moment, and when you're in that position it can be hard to make decisions of what the best thing is to do. When making decisions we often rely on emotion or logic to make those decisions, but those are informed by experience. And when this virus first started, I'm sure like many of us, you were thinking about the experiences we've had with swine flu or avian flu or SARS, where there was a lot of noise made but it never really manifested itself into something. I'm sure we all now agree that this is no longer the same level of those viruses, and it's developed into a far more serious issue, which is unprecedented. So for us, in order to make the right decisions, particularly on an investment element, we have to rely on our sound processes, because whilst this is an unprecedented issue related to such a virus that exists, we've been in unprecedented economic positions over the last 10 years. We've just coming out of the 2 years of Brexit-related discussions, unprecedented. We had the global financial crisis that ended with historic lows of interest rates, unprecedented. We've had a European debt crisis where countries were almost bankrupt, again unprecedented. And for those clients that have been with us, invested for a longer period of time, you'll know this isn't the first place we've been in difficult situations, but our processes got us through those difficult times, and we're confident that our processes will continue to serve us well through the current crisis we find ourselves in. Now, Kel can probably expand a little bit more about what that means from a portfolio positioning. Conscious that some of our clients are invested on a discretionary basis, some of our clients are invested on an advisory basis, and some of our clients are invested with third parties. In either of those examples, our process, our logic, our decision making is exactly the same. It's just different methods of how we are delivering that. And your advisors are in the best position to keep you informed of what that means for you as an individual, but the philosophy and approach that we're taking is consistent regardless of how your money is invested. So here to tell us a little bit more about what we're actually doing is Kel. As I mentioned, Kel sits on our investment committee and helps us with the decisions we're making. Now, Kel, the first thing I wanted to focus on is there's been a lot of news about indices and stock markets going down and a lot of bad news about things going down. I want to talk about the benefit of diversification in our portfolios. Can you give us some examples of how that's helped us over the last 4 or 6 weeks?
Absolutely. So Stefan's quite right that the headlines have been dominated by falls in stock markets, so shares. And indeed, these do tend to be the most volatile asset class most of the time. However, it's important to remember that most portfolios are spread across a range of assets. So most portfolios will hold some shares, some property, some bonds, and some alternative asset classes as well. Now, when shares go down quite steeply, as we've seen over the past couple of weeks, often it's bonds, and particularly government bonds, which hold up well in those circumstances, because investors can always trust that even though companies might encounter difficulties, governments, for example, are highly unlikely to default on their obligations. For that reason, the government bonds in most portfolios have actually risen in value over the past couple of weeks, and that helps to offset the losses that we see on shares. Similarly, property is obviously, it's a bricks and mortar property, the value of that is not dictated by movements in the stock market day to day, as with shares. So that's another example of an asset class which helps to ensure that the overall value of portfolios has at least some resilience during this challenging time. There may be small amounts of exposure to other alternative asset classes, things like gold, which tends to rise in times of turbulence too. So when you have that blend, that overall mix of asset classes, it helps to diversify you when one particular element of the portfolio does encounter difficulty. And I think it's always important to remember that behind the news headlines, which inevitably always focus on the most volatile part of the market, which is shares.
Okay, so putting that into practice, whilst we recognise that all of our portfolios have received negative returns over the last 2 months, what we've been able to do for our clients is insulate them from what the stock markets have been seeing, and insulate some of that risk from the portfolios to varying degrees. And even our clients in our highest risk portfolios still have a small amount of gilts and bonds within their portfolios. Our lower risk clients, I know we talked in our investment committee earlier this week, our lower risk clients, not in light of Corona, because obviously this was not something we were aware was coming, but off the back of the Brexit and the risk around Brexit at the end of last year, some of our lower risk portfolios still have quite an amount of cash within the portfolio. What opportunities does that present for us with our portfolios moving forward? Absolutely.
So, as you say, it has been a time of considerable concern on a number of fronts for investors. We've had, as you mentioned, Brexit, we've had the trade situation between the US and China, other challenges like the kind of instability we've seen in the Middle East, and as you say, for that reason we've held an expanded level of cash in some client portfolios through this turbulence. What we've been keen to do recently is look to see if we can deploy some of that capital quickly to invest in assets which have fallen in value recently, but which still look to represent strong fundamental value over the long term. The best way to think of it really is a bit like a sale. Why not buy assets while they're trading more cheaply than they were a few weeks ago, as long as we're confident that those assets have fundamental value for investors over the long term, and that's the opportunity that we're seeking to take advantage of now.
Okay, so we're talking about opportunities of how we can deploy cash within the portfolio. I know we've also been talking about within our portfolios trying to look for opportunities. We've set our portfolios up with funds that do well in downturns. What we talk about is downside capture. In essence, if markets are going down, we don't want to go down by as much as markets are going down. The downside sometimes of those funds is that when markets start to go up again, those what we'd call more defensive funds don't necessarily do as well when markets are going up as we'd like. So can you explain a little bit more about the work we're doing under the bonnet to look at funds and whether there are better opportunities to put within our portfolio?
Absolutely. So the overall construction of client portfolios, or simply just the blend of different funds that we have in portfolios, is something we spend an awful lot of our time researching at Asset Intelligence in conjunction with Furnley House. What we look to do is, as Stefan says, blend funds which tend to protect capital when we're encountering difficult times, as we are now, with those which offer the opportunity to participate fully when stock markets are rising, to ensure that you have a balance, a bit of the best of both. In that way, you can you avoid at least a degree of the losses on the downside, but you ensure that you participate on the upside, and that gives you the best opportunity for a smooth ride with strong overall returns over the long term.
Okay. And we talked about having cash within our portfolios and reviewing what we do within our portfolios. Obviously, we invest in a range of funds, a range of collective vehicles. The fund managers themselves who manage those funds, they're going to be in the same position as us, looking right now at where the opportunities sit, looking at the cash that they might have within their funds, and looking at whether or not they're changing their holdings in light of what's going on. Can you talk a little bit about what we're doing to engage with those fund managers to find out what they're doing?
Absolutely. So we've got a team of analysts at Asset Intelligence who spend a large proportion of their time engaging with asset managers, finding out what the managers of the funds that you're invested in think about what's going on in the world, what their view is on where we're going to go from here, and how they're positioning their portfolios to best take advantage. Now, one of the advantages that you have as a Furnley House client is that you have the Asset Intelligence investment team working very closely there, and because of our scale, it means our access to fund managers is very strong. So if we want to get inside the head of the manager of a particular fund that you have exposure to make sure that they're making, as we see it, reasonable calls given that what's going on, they're just a phone call away for us. We can engage with them via email, through Skype. We can go down and see them in person. It helps to make sure that we know what's going on with your portfolio, with all the constituent parts at any given time, and that if we think that we need to make a change one way or the other, we have the access, we have the resources, we have the capability to do that quickly and efficiently to make sure we get the best outcome for your capital.
Okay. Thank you for that. The last thing that I want to end on is the question we can often get asked, and I know some of our advisors have been asked this over the last week or so, is why don't we just take the money out of the investments and put it in cash? We know that things are difficult, so why don't we do that? And I can understand it, I can certainly understand, particularly for clients who have invested with us more recently, why you may think that. It's really, really important to understand that whilst the coronavirus is unprecedented, as I've already mentioned, these economic circumstances are not unprecedented. And what we always see in these scenarios is, as volatility increases, the kind of fluctuations increase, the best days in the market can often come within a couple of weeks of really bad times. We don't know, we are unable to time when these things are going to occur. But if we try and leave the market, the challenge will be then when do we go back into the market? And by trying to be clever, most of the time you will actually get that wrong. Statistics show you that just by missing a handful of the best days in a market, you can almost halve the returns to expect from your investment. Okay, so it's really important at this time that we remain invested, and what we're doing at the moment is looking to how we can reposition portfolios, how we can take advantage of our defensive positions, how we can reallocate funds. But most importantly, what Kel's mentioned is we're looking at the funds and we're holding them accountable to their processes. Because we have strong processes, it's really important that the fund managers that we're giving our funds to look after, that they're doing what they say they're going to do when they said they were going to do it. We want to see that they're acting in the right way during this time period, and that's what we're spending our time doing at the moment. Is that fair?
Absolutely.
Okay, so just to leave you with the fact that, as I've already mentioned, if there are any concerns, your advisors are well positioned to help you through those questions you may have. And as a business, we're doing everything we can to make sure we're open and available for you to answer your questions. And we're committed to doing that throughout this virus, irrespective of how long it takes.